Hey everyone, Keith Conyers here, entrepreneur, storyteller, and catalyst. I wanted to talk with you for a couple of minutes about the Credit Card Competition Act, which is a legislation that's been brewing for quite a while. And it's put on or brought to the table by Senator Dick Durbin, who was behind the debit card legislation, which was passed back in 2010, went into effect in 2011. And I'm reading the article about it and I wanted to share it with you because I think it's really important. But I also want to share with you why I believe it's going to fail. And I actually have 5 reasons why I think this legislation is going to be a failure. And I'll jump into that. But just to give you some insights, Durbin urges the Senate to bring his Credit Card Competition Act to the floor for a vote. The bill would enhance competition and choice in the credit card network market, which is currently dominated by the Visa MasterCard duopoly. They call it a duopoly because 83% of all transactions flow through those two networks. And what they don't really talk about much, and they do a little bit when you actually listen to some of the actual speeches that have been given, is there's really three parties that get paid when a credit card or a debit card is used. First, Visa gets paid, it's a fraction of a percent that they get paid to manage the entire network. The second party is the card issuing bank. If you're a consumer that carries a credit card or a debit card, you likely got it from your bank. The bank issues that card, and the fee that they charge is called interchange. They're the ones who get paid two-thirds of the fee whenever you use that card. The third party in the transaction that gets paid is the actual payment processor or the acquirer. They don't really talk about that party much in this legislation, which is ultimately why I think it's going to fail, which is why I think the Durbin legislation really wasn't successful either. And some people say that over 1 million people became unbankable, where they couldn't actually afford the services of a bank. There was also lots of other things that changed as a result of the legislation being passed. Now, if you're a smaller business that, like a coffee shop, or your average sale is less than 12 to $15, the Durbin legislation, which was passed back in 2011, actually made it more expensive for you to accept debit cards because of what happened after the legislation was passed. Essentially, what banks did is they actually raised the fees on any transaction costs that were lower than the minimum that was set. If your average sale was over 12 to $15, then it was a benefit if the actual payment processor passed on the savings to you. What many experts say when they talk about the Durbin legislation, which was passed in 2010, they say that it wasn't really effective in lowering costs for consumers. And the reason was because, number one, business owners have a whole host of other costs that are always going up because of poor legislation and poor decisions by local, state, and federal politicians. And also just other situations with minimum wage increases or payroll costs or technology costs or everything that continues to go up because of even printing money, things like that, which causes inflation, right? Which causes a variety of challenges. It actually, I won't get it in today, but it caused a rippling effect of costs that impact business owners. So it's actually interesting that we're talking this year about the Credit Card Competition Act when there's been so many other bad decisions that have impacted small business owners. But I digress. Why do I believe this legislation is ultimately going to fail? Well, I actually did some research on what they're actually suggesting is going to actually fix the issue, and it's really not going to fix the issue. So, what they are actually suggesting happen is Visa partners with a card issuing bank. They go to this bank, let's say we'll call this bank Sconyers Bank. They partner with Sconyers Bank and they say, we're going to help you issue cards to all of your consumers. Now, me as a consumer, when I go get my debit card or my credit card from Sconyers Bank and I go down to the business owner's coffee shop and I use it, it basically runs over the Visa network because Sconyers Bank is partnered with Visa to issue that card. What they're actually suggesting is that a second option be provided on that card and whichever is the lowest option will get routed to that network. Now, it causes all kinds of issues when it comes to how the data is passed through the networks. But the challenge with it is that they haven't actually defined what that network's going to be. That's going to be the alternative. And just requiring one other network, I'm not really sure how much in cost is it actually going to save the business owner. Some experts say it's going to save about $50 per year per consumer, which, if you think about it, like, to me, $50 a year isn't going to do much for our household. But, sometimes these legislations are just, interesting. So they're actually requiring that banks partner with multiple networks and provide an alternative network at the point of purchase whenever a consumer goes out and pays. And if that alternative network provides a lower cost than whatever the cost is for Visa, it would route through that network. Now, here's why I don't even think that's a good idea. I want to provide my reasons for why I think this legislation is ultimately going to fail. Number one, their focus is too narrow. Visa and MasterCard aren't the problem, and there's a lot more parties involved in a transaction, as I've mentioned, that actually get paid. Like when Visa and MasterCard, adjust rates in April and October, some of these rates go down, some of them go up, and there's multiple factors that go into the conversation of whether something's going to be increased or lowered. And I have to believe, and I don't know, I've been in the industry for a decade, but I have to believe that there's some conversation that happens between Visa and, in this example, Scania's Bank on what's actually going to happen with actual rates, since that interchange fee goes back to that card issuing bank. So, number one, their focus is too narrow. Number two, they've misdiagnosed the problem and the solution. So, when the Durbin legislation was passed back in 2010, they left out the fact that payment processors are ultimately at the end setting up the pricing that business owners are actually going to pay. So many processors, because of how they actually bill the business owner, never pass the savings onto the actual business owner. So the legislation just benefited a bunch of payment processors. So in this scenario, they are banging their heads on Visa and MasterCard. And even if it gets passed, there's no actual legislation, to my knowledge, in terms of how this is being presented, that actually holistically addresses the entire industry. And because they haven't addressed the entire industry, their solution is flawed. Number three, there's no philosophy for improving their solution. I'm not going to get into policy. I don't really care how you vote. That's not my premise. But politicians aren't perfect. They're just like us. They make bad decisions. They have blind spots. And this is another legislation that potentially has blind spots if it's not holistically addressing the entire industry. And if you're going to pass a legislation, you have to have a process for coming back and addressing or evaluating, is it actually working? And the Durbin legislation failed on multiple fronts, and they actually haven't fixed it. So they don't have a process for improving the previous legislation surrounding payments, and they probably don't have one here. I would like to hear what that is if I'm going to vote, or if I want our elected officials to vote on a legislation that's supposed to save us money. Number four is it doesn't address how providers who mark up interchange represent pricing. They aren't actually required to fully disclose actual cost. So interchange fees aren't actually being shown to many business owners, and it can be misrepresented, like it often gets misrepresented or just fully hidden from the actual business owner. This is why if you lower interchange costs, it doesn't guarantee that it's actually going to reach the business owner for it to in turn reach the actual consumer. That's my fourth reason why I believe this legislation is going to fail. Number five, it doesn't address the lies that cost business owners thousands of dollars per year in fees. I wrote an article on the top 10 lies that business owners need to know if they're going to process credit cards. I'm going to link that article into the show notes here as well, because if you're going to pass a legislation that's supposed to save money for consumers, you have to have a holistic approach, and you have to actually address the issues that business owners face every single day when dealing with credit card processing providers, Visa, MasterCard, and card issuing banks. So, what are my alternative suggestions? I believe that if you're going to criticize something, that you should present some form of an alternative that's actually going to help. So, number one, I only have two when it comes to this, but the second one is really robust. Number one is my question is should banks be allowed to pass the cost to businesses? Imagine a world where interchange costs were never actually passed to the business owner, but it was actually built into the cost of the cards that consumers were using. Now, I don't know how that impacts consumers on the lower end of our economy who may not afford the banking services. There may need to be some provisions made for people who aren't in a position to afford to pay for bank accounts and credit cards and things of that nature. I'm not sure what they are, but if they actually force banks to build it into the cost of the products and services that they provide, then you actually create true competition where banks all have to compete for the consumer. Number two is what protections should be put in place to further help business owners and consumer. Think about this. What if a bank was required to provide financial literacy for consumers? What if you're actually going to pass this legislation, that all providers were required to fully disclose interchange fees at cost and fined if they misrepresented interchange fees? What if you actually banned all liquidated damages clauses in contracts that are actually passed on to business owners when they sign up for a new point of sale system or a new credit card processing company? I just talked to a business owner today who has a very popular restaurant point of sale system that he wants to get out of because they just doubled his credit card processing fees, but his termination fee is a liquidated damages clause, and he has to pay over $40 to $50,000 just to get out of it. And so a restaurant typically isn't in a position to pay out $40 to $50,000 when they have to pay out tips and payroll and all these things that go into running a restaurant. So, what if they actually did away with liquidated damages clauses? What if providers were required to fully disclose their profit so business owners could truly negotiate and determine which provider was right for them based on an industry wide standard on how pricing and profit is actually disclosed? What if associations were required to publish or disclose any revenue sharing opportunities that come from partnering with point of sale systems or point of sale companies? All these things impact the total cost that business owners on Main Street have to pay when it comes to accepting credit cards. And if they actually do these things, I think that they actually have a shot at actually helping the consumer save money. My name is Keith Sconyers. I'm going to link a couple of the articles here so you can read them for yourself. If you need any help with determining if the payment processor that you're using is right for you, if you're paying what you're supposed to pay or not, I've been in the industry for about 10 years. We help business owners determine which one's right for them. Sometimes they switch, but they actually don't have to in order to reap the benefits of working with us. If I can do anything to help you, feel free to reach out. Have a good rest of your day. Take care.